Hey everyone, this is Vince, and welcome back to another week of tracking my finances. So this week is going to be from January 4th to January 11th. I'm going to go ahead and show you my progress. So this time I'll jump right into it. So this is one of my accounts here. Just go to the past week. So since January 3rd it says, but January 3rd was, let me see what date. January 3rd was Friday, so just taking it from Friday to Friday, essentially, since the markets aren't open on Saturday. So this is what we did for the retirement pre-tax. Again, this is like an ETF-based portfolio. So let's go ahead and show you what happened with this account. So I have it set up so every week on Monday, it deposits $65 into this account. I had $1 left over from other transactions that wasn't invested automatically. So that's why it says 66, but for the past week, we added $66 to the portfolio. So this got invested into the stocks that I have at the bottom there, and I'll show you the breakdown in a second. And then market gained $507.71. There was no earned dividends, and it was a $1.51 return on this. Everything's up right now, so it's not anything that's super surprising, and I obviously don't expect these returns to continue to go on into the future. Show you what went on here a little bit. So the information technology, this has been just insane the last couple of years, and this is where we're at here. So this is sort of if I click on the actual listing, it kind of holds the top holdings of Apple and Microsoft. So you can see that obviously those stocks are just crushing it. And obviously the whole market is too, but if you look at like just past year for this ETF alone, it's 47%. So it has been killing it. Past 3 years has been 101. So, that's what some of my portfolio has seen returns in. I'm going to go back to my main portfolio. Should go through some of the other returns. So this one's actually a little bit underweight. So I guess it needs to we kind of need to add more to that one during the next investment. So what happens is, as these stocks move up and down, they get away from their target. But if you have the auto investing on with M1 Finance, it kind of automatically reorders it for you. So if I'm a little bit under on a few, like these two are a little bit under, this one too, it'll go ahead and true itself up on the next few transfers. So as you can see here, this is the account, so I'm depositing $65 weekly, and that occurs on Monday. So moving on to the Roth IRA. So again, this is a very ETF-based portfolio. This is post-tax, so everything that I get from this at the end, when I eventually cash it out, is some things that I'll keep. So on this one, I deposit $90 a week onto it, and that kind of auto-invests itself into the stocks that I have below. Again, the information technology is the one that has been the highlight here. This one is very similar breakdown to what I have in the other one, just slightly different collection. And then when I look at the gain, it was up $93 for a 1.3% return. So that's sort of where I'm at. I'm going to go back really quick to the other one just to show you what I actually invested in. So this week, we're looking at the 6th here. We had 2 buys. So just continue to invest into that information technology and then the dividend appreciation. So it shows you the breakdown there. It's kind of weird that the deposit shows as being after the buys, even though it technically was obviously before, because that's you get the money in and then you invest it. I'm not sure why it does that. It's just a little thing that annoys me from M1, but all good. Moving on to the Roth. So here, I deposited the 90, and then we had the buys. So the buys were quite a big breakdown. So this one must have been pretty even in terms of what was actually set at the targets versus the actual. So this pretty much just stayed with the actual percentage values that I have designated. I'm sure there was some fluctuation, but this is sort of the breakdown of what we put in. Really, just important, and I want to highlight the magnitude of continuing to deposit every week and doing that dollar cost averaging strategy. It really just makes sure that your portfolio is constantly being invested into the stocks that are shown on your portfolio, and really just getting as much money in there as possible. As you start to get more money into the portfolio, that's when you really start to see the returns and the dividends, everything like that just continues to build and build. So as frequently as you can. It doesn't necessarily have to be the same amount, I wouldn't even say, although, it's probably recommended to do something on a consistent basis. But just if you have, at the end of every month or at the end of every year, quarter, whatever it is, you have extra dollars that, you're not just going to be blowing on things that are not really that important, maybe clothes that you don't need or things that you don't need around the house. Throw it into your portfolio and keep building that wealth. So this last one here is the one I'll focus on a little bit more, even though it's sort of just kind of a portfolio that I only put $50 a week into. I kind of find this one to be the most fun just because it's stocks that actually I pick and not just ETFs that are tracking the market. Obviously, I do find that the strategy overall is, for investing in the market in general, at least my strategy is to kind of just invest in the ones that are kind of pre-built for you. You just invest in those. I never want to call anything safe, but they just basically track the market, and if the market does well, they'll probably do well. Whereas, sometimes if you pick stocks on your own and the market does well, you don't necessarily do well. So this one's a little bit more risky on the risky side, but I will go over it just because these are ones that I pick myself. So we'll look at the past week performance. So it did really well this week. We were up almost 2% for a market gain of 231. And this one I deposit $50 a week. You see a little bit extra there because I had a $20 referral bonus, and then I had a little bit of trading amongst some stocks. So I got rid of this Zora company here, and I added in Elasticsearch and Square. So I'll go through some of the portfolio and what the companies do. So SAP is a ERP system. They really have so many items in their portfolio that they do everything. To really get into it and try to explain their business is a little bit complex, but it's a big company. They pay a dividend. It's something that, in an industry that just continues to grow and expand. I love the potential there. And then, I'll just show you all the way down. So Elasticsearch basically just helps companies, with their data and to be able to search on their data. It essentially takes the information that's in a system and puts it on another server so that it really enables the quickness of how you access that data. So if you have it, if you're hosting all this data on a specific server and you try to access it in-house, so if you're doing it on your own servers, it could take a little longer, but what they do is they kind of expedite that process and load everything onto their own, and then they're able to spit it back. I don't know the exact technical details of how that's done, but I know that a lot of companies, including the one that I work for, finds that to be very helpful, and we actually use that product. So I'm going to go back real quick. Sorry. All right. Going back down now. So that one is a company that I just recently added to the portfolio. So you can see here it's only 0.7 of 10. I don't like rebalancing because I like to kind of, like for example, I have pretty good value in SAP, and I don't want as much, but at the same time, I don't want to sell off what I have because I still believe in it. So what I'm going to do is, by way of the deposits, and even though it'll take a long time, it will eventually true up and all of these numbers will become their target. It just, I didn't want to sell off what I have. Same thing with like Delta. They pay a good dividend. I want to keep the amount of shares that I have rather than sell a lot of them off to reorganize or rebalance the portfolio. So I'll just look at without going through all of them. I mean, I'll do a quick rundown here. We got Pepsi, Square. They do payment processing. A lot of local businesses use these points of sale. Delta, obviously, SAP. Discover, I feel like, is making a real good push towards sort of like the millennial generation and how banking will be done in the future, and I think that they do a really good job of that. So that one I added recently as well. Workday is an HCM system where, just for payroll and human capital management, I feel like they do an excellent job, and I just see them continuing to grow. That's also the same thing with Paycom. Both of these are major players in the space, and I think Paycom still has a great way to go, and I foresee them having a lot of growth there. Zendesk is software management software for ticketing management. So, you have a question, help desk for a company, they'll actually provide the software for a lot of these companies. Zoom video software for meetings and business to business. And also they have individual as well, individual plans that you can use for like freelancing, things like that. Beyond Meat, obviously the up-and-coming plant-based meat sort of startup turned public company that has been doing really well. I believe they're working on finalizing contracts with McDonald's to even try to get some of their products into there, and they've already been in Dunkin' Donuts and a few other chains as well. So I think that there's a lot of room to grow there, and I think that they have sort of a first mover advantage. I know a lot of these bigger companies now that have been doing conventional meat, Tyson Foods, some other ones, they're also getting into plant-based, but I think Beyond Meat, what their advantage is they were the first mover. So because of the fact that they were the first mover, that they have that advantage, but then also I feel like they have a trust advantage. So a lot of these companies that were selling traditional or conventional meat, they are a little bit at a disadvantage because for all these years they've been loading up these processed foods that are in the supermarkets, and then now they're sort of transitioning their methodology to a plant-based model, and they try to market that as being something that shows how transparent they are and this and that. But I think for a lot of older consumers, I'm sure as generations go and turn over, that's something that people obviously forget things, they don't really care over time. But I think in where we are now, Beyond Meat has the trust, whereas I feel like some of these bigger companies are a little bit still on the untrustworthy side in terms of what they're selling you. And so for now, I think Beyond Meat's a great investment. And then these other ones, I have some small stake. Basically, just these other companies, I throw 5% in. I have 5% in Beyond Meat, but I would like to up that. And then Smartsheet and Boeing. So these are just a few other ones at the bottom. Again, same thing with Boeing. They pay a dividend, and I don't want to get rid of the shares that I have here, even though I won't be investing much in the future. That's sort of where we stand. And then if we look at the past week, Beyond Meat obviously had a pretty good week based on some of the news that I mentioned. Some of these other companies were up just a few percentage, and then Square was up almost 9% just in the week. So I'll keep you updated on sort of where the status is on these as we get closer to like the targets and how these companies continue to do. But pretty much everything was up this week, so no complaints there. So what I'm going to do now is I'm going to hop over into I'll show you the spend account here, and I'll show you what I spent some of the money on this week from this account. So just give me a second, I'll pull that up, and then I'll talk about it. Alright, so looking at the M1 spend account here, not many transactions going on in the past week. Basically, I had the transfers to my 3 accounts that I just showed you, so we $65, $90, and $50. And then I had a credit card payment to one of my Chase accounts for $258.76. And then the only incoming or positive for the week was ATM reimbursement. So it was just like $3.50. Basically, you just put the money back in your account if you withdraw from an ATM, and they charge a fee. So that was the only thing from the M1 spend account. I will be getting paid next week, so you'll see a little bit of an influx there, and we'll talk about that on next week's show. And now what I'll do is that's pretty much it for the M1 spend and the M1 finance part of the video today. I'll jump into the 401k and show you a little bit about that, and then I'll jump into credit cards outstanding. Alright, so now we're on the 401k side of things. Market change value change in market value is $269.12. So there were no deposits this week. I'll show you a little bit about what happened during the week. So you'll see here that there's only two items or stocks reporting values on them. So what I did was I consolidated what I had invested into just these 2 stocks, and I'll show you the change in their value down here. So if you look at this section, basically for the week that I'm showing you, we have basically just a sell-off of everything here, and sell-off of everything here and over here. And then what I did was I just added it to these 2 accounts, so the large index and then the mid cap. So you'll see there's $3,000 put into this account, and then $2,100 put into this account, and these two particularly, mostly made up the gain for the week. I had before, I guess that the two or the three stocks sold, I had made a little bit extra, but that's pretty much what we're working with here. So there was a $269 gain there, and there was no dividends or anything paid out this week. So that was just a nice little change. So we were up 0.8% for the week, and that is where this account stands. All right, so now hopping into the Apple Card. Really, there was just one payment this week, so it's just a haircut. I did get refund on those pair of shoes that I mentioned from last week, and then they took away the bonus points that I got based on that purchase. But other than that, trying to keep that spending low. So far, we're at $33 for the month. I'll continue to track this. But yeah, the only two things I have are the Apple plan payment is $299 just for iCloud, and then we have the barbershop payment there. So this is it for this account. I'll jump over to Chase. All right, so now we're jumping over quickly into one of my Chase cards. So this is one of the two. Basically, we have just payment on Amazon groceries here. I had ordered something else, so I guess the charge was for it probably would have been on last week's. But basically, this is just the tip that I left. So usually when you tip at either restaurants or I guess in this case Amazon, they charge the actual amount and then they add on the tip like the next day or so. So I saw this show up in my account here. So that's just $6, and then $19.99 were just some household items that I bought, and then gas was $29. So again, keeping spending really low, not buying anything really that I don't need. Even the $20 household things was stuff that I find or will find useful. So just trying to cut back on anything that's unnecessary, I guess, so to say. And then obviously the last thing at the top here is that payment, so that you also saw when I went over the spend account. And this is really just to pay the bill that was outstanding, ending on December 6th, I believe. So I'll keep this running total, and I'll jump into my other credit card now. Okay, so as you can see, I did the filters for January 4th to January 11th, and from this week, I actually had no charges on this card. So, overall looking good. Now what I'll do is I'll show you just an overall breakdown of what we went through today and where we stand in an Excel sheet. All right, so now looking at totals for this week and where we stand. So I'll show you last week we were at $92,505. This week we're at $93,373. So since there was really no incoming money, basically all this was just from stock gains from across all the accounts. So I'll show you the breakdown over here. This is where we currently stand. So this is everything that I just brought over from the accounts that I showed you. So we have total here. I don't count the credit card balances, so I don't subtract the balances from the value here, just because eventually when they get fully charged and paid through these accounts, that will go down. So I'll just use this as the point of reference, but this is where we're at right now. And last week we were at halfway through 92. So you'll continue to see this chart populate and hopefully continue just to go up. Obviously, with heavily investing in stocks, there's going to be obviously a lot of fluctuations. So I know that, I'm aware of that risk, and for the most part, over time you expect it to go up, but of course you will see some fluctuations. So there could be a future episode where it dips below both of these values, or if a market correction occurs, so to say, and this amount gets cut by a third, you'll see that as well. So this is what really the purpose of this show is to do, is to kind of show you what I'm doing with my money, how if you wanted to model this, how you can influence your own finances, and overall just try to leave a positive impact on how everybody works with their money. So thank you again for watching and tuning into this week's video, and I will see you next week.